All right, so today we'll be going over market structure and area of interest or point of interest, same thing. All right, so let's start with where we're going to actually mark up our chart. So you're gonna you don't need to download the app because you can always just go on the internet and search for TradingView. But to keep whatever markup you have on your chart, you're gonna have to log in to you're gonna have to log into your email to be able to keep your chart history. Alrighty. So as I stated before, we're gonna start with market structure and then we get into points of interest. Everybody already know what, Forex is. Forex is basically the exchange of currencies. Just like you go from Jamaica to the United States, you'd have to change your Jamaican dollar into the US currency. So that's what basically Forex is. So we'll just trade Forex on a index level. So market structure. The market goes two-way. The market go up, down. This is market structure. This is how the market move. Just like how you would have what do you say now? A snake. A snake goes left, right to go forward. The market go up, down to go to go up, and it does the same thing to go down. It's just that you have a push and a pull. And we're gonna get into that on the charts shortly. So a push is when the market is going up and it makes a series of candle to the upside. A pullback is when it make a smaller amount of candles, sometimes one or two candles, depending on what you're trading. Sometimes you have 20, 50 candles, but a pullback is when the market come back to a certain area and then push higher to break structure. Structure is gonna be the last like highs where the market push from. So in the market we have lower high. Oh, put it on my caps lock. So in the market we have lower high, higher high, lower high, higher high. And this is how the market move when it's going upwards. So we have, let's move the start from here. So we have a low, then the market push up, we create a high. Then the market pull back, we create a lower high because this this is higher. Oh shoot. What am I talking about? I'm sorry. A higher low. Because this low will be higher than this low over here. And then we have a higher high because this high will be higher than this high over here. And that's how the market move in a uptrend. So we go from having a low to a high, to a lower high, I mean to a higher low, because this low over here is higher than over here. Then we push and break structure. Structure would be the last place the market create that high. That's when we break structure. And I'm gonna explain that in a short while. Then we create a new high whenever we come up here. This pullback will give you a higher low, and then the push to break structure again will give you a next higher high. Whenever we are going down, we go from high to low to lower high to our lower low. Then another lower high. So this is a downtrend. You have a high. So let's say the market go up and we did something like this. We failed to we failed to create a new high above this and we started coming down. We started coming down like this. This would be pretty much this right here. So now we're going in a downtrend. So instead of creating new higher highs, we start creating lows, higher low, because now this low over here will be lower. I mean, lower high, because this low over here, this high over here will be lower than this one right here. And then we come down to create a lower low because this low right here, now we break it, we're creating lower low than this one right here. We pull back. This will be now a pullback because, we start going down. This now would be a lower high. So each highs will be lower than the previous whenever we're going down. Each highs will be higher than the previous whenever we're going up. And that's how you differentiate structure in the market. And how we're gonna find our point of interest. We're gonna find our point of interest in areas like right here. Wherever market previously turned from. So either in the leg or in the high. So those are where you're gonna look for your sell entries or your buy entries, depending on where the market is going. Alrighty, so that is structure. Like I said, whenever we're going up, we have a high, low, high, low, and whenever we're going down, we have a high, low, lower high, lower low, lower high, lower low. And let's get in the charts where we can see all of this now. Let's go UJ. Alrighty. Before we get into all of that though, for persons who don't understand, because most people only see the candles and they don't really understand. Each candle represent a certain time. So I'm on the daily time frame right now. This is a daily time frame. Each one of these candles represent 24 hours worth of price action, meaning it's 24 hours worth of trading between banks in all the countries pretty much in the world and hedge funds and all of that. Those are the persons who actually move the market. So each one of these are represent a day. You go down to the 4 hour, each candle on the 4 hour time frame represent 4 hours worth of price action. You go down to the 1 hour, it's the same thing, go all the way down. So each one of these candles represent the trading between in whatever time frame you're in as it regards to candlesticks. You have multiple different things that you could use. You have line chart, which is that you have like all of these right here. But most persons, or pretty much everybody that I know that trades, use the Japanese candlesticks because they're easy to understand and they create a pattern. So, like I said, whenever we're going up, we keep creating highs, low, higher high, higher low, higher high, higher low. All right, so let's go into how we actually find our areas of interest now. I like to start from the daily. And what I like to do whenever I start from the daily is I like to find my highest point where the market previously go, and then I'd like to find my lowest point. Now you could potentially come all the way over here, but it makes no sense because all of this price action, look, this is from October. It takes months for the market to get up here. It's going to take months for it to get back down here. So right now, you just want to focus on the closest high, the closest low on the daily time frame, and then we go down to the 4 hour, and you want to find where the market previously, you can adjust this to right here. So I like to put, if you realize where I'm putting my lines, I like to put my lines at the body of each candle, like at the body. Yes, the wicks, a market could potentially, like for right here, market could potentially come all the way up here, but you have a higher probability for the market to come back to at least the body instead of all the way up to the wicks. Like a lot of persons said, trading is gambling, which somewhat true, but kid, trading is more of a probability game. It's you betting what's the probability of the trade of the market going to the upside or to the downside. And also with patterns, you can be able to predict that, and that's how you actually make money inside of the forex market. So like I said, you go to the daily, you want to get the high, the lows. Then when you come down to the 4 hours now, you want to find wherever the market had previous rejections. So if you look right here, we have some form of rejection in here. And more time than not, if you can find a certain zone, or if you do find a certain zone and you jog it to the left, more time than not, market previously reject from that. So all right, let's go. Let's do this instead. Let me show you something instead. Let's use this line. Put it right at the body. Let's go to the left. If the market previously came up here, I'm sure it's gonna have some form of rejection to that side. Have we ever been that high before? Yeah, see? Look right here. So everything the market does, it repeats it. So if you realize these lines that we took from the highs from all the way to the left, look what happened. This was a low, this was a high. I got the other zone in the middle. Look what happened here. We have rejections. All right, let's go back to current price action. So I like to use the black lines for my daily, but I like to use these zones for my 4 hours. So you go and you want to get at the body. That's one zone. All right, market came down, reject, and went back up. You want to get, these lows over here, because if you realize we use this as support to go up, support to go up. We break below, we use it as resistance to come back down. So this is a strong area of interest. So this is how you find your area of interest. So your area of interest is where market previously turned from. And like I said, you want to get it as close as possible to the bodies. Well, most people use wicks, but I like the bodies. Like I said, more time than not, the market will tap into the bodies. Sometimes it won't go all the way down to the wicks, but you will definitely tap into the bodies. But yeah, you want to find those areas. Let's go again and see right here. Now we can use this one down here, even though it's right on top of the daily zone right there. All right, so we have these. All right, let's go down to the 1 hour. And you pretty much do the same thing on each time frame. Because like I said, each one of these time frame represent these candles. So like one candle represent 1 hour worth of price action. So when the market is actually moving, you're gonna have this one candle will come all the way down here, then it will go all the way back up and then come all the way down again. So it's a lot of price action within that 1 hour candle. So you want to find your zones on each time frame so you know where the market could potentially turn back from. You want to get right here because you see we have some form of rejection over here. You want to get right in here because we have rejection here. We break, you break below, use it as support right there. So I want to use it, just drag it to the right. The market is always gonna have some form of reaction from wherever it previously had any type of resistance or support from. And yeah, so let's go into this now. This was the high. Market pushed down, created a low right here. Created a pretty much a pullback right here. A higher low, I mean a lower high. Then we came down, created a lower low, lower high because this high over here is lower than this high right here. Came back and tap into that zone. We didn't we didn't break, we just weak. So I only classified breaks as the candle body closing below a previous year. Like, let me get into that 1 second. So we created pretty much just market structure right here. So you don't have a break unless the body closes. Anything within here is just market structure. All of this is just market structure until the market breaks. So this would be the candle that breaks structure, and we push down here. So now we created a new lower low, came back up, created a new lower high because this high is lower than this would be the previous one, or this if you want to call it. But you realize each one of these highs keep getting lower, lower, and then this is just market structure. Market structure. All right, so this would be the previous high because this high is lower than this high. And I'm gonna show you whenever we shift structure, equal highs. You see these body pretty much close the same thing. So it's equal lows, she said. This would be the previous high, right? So we shift structure right within here. We use this area that we previously used as support. We broke back above. Now use it as resistant. We break above now. Break above at this side. So now we shift structure. Right here is where we shift structure and we start going to the upside. This is where we start going to the upside. So you're gonna want to look buys above this area, which would be, that's why you have your zone jog to your left, to your right. So you will start looking buys above this area because this was a previous lower high. So if we're breaking above lower highs, that means we're shifting to go to the upside. If we're breaking lows, that means we're shifting to continue down lower. And yeah, I mean, we created small pullback, but nothing major. But if you realize we keep going, like each one of these uh lows keep getting higher, like right here, we created high, higher high, higher low, higher high. Like that's how the market move on a daily basis. All right, how you take your entries, you want to get down to the smaller time frame. No, let's get into entries a different day. You just want to find market structure. You want to see where the market is going. So let's say on this day, the market is up here. All right, market up here, created this. You're in, let's say this wasn't here. You're in, well, let's do entries. You're in the market right here. You're watching the market. You know we're going to the upside. All right, boom. where we could potentially have a pullback to. We could potentially have a pullback to, use this right here as support to go to the upside. We use it as resistance to go to the downside. All right, let's jog this to the left. All right, look. Boom. Here we wick through what we immediately reject. So you're looking for buys now to potentially come back to these highs up here. You want to start looking for buys above this because whenever we are below it, we're going to the downside. So you want to start looking for buys, let's say about up here to go to the upside. But you didn't get that. You didn't get that. So now the market pushes close, reject, came up and reject once again. In your mind, whenever we're below, we're selling. Whenever we're above, we're buying. Pretty much, if you drag it over here, you realize we broke above, we pulled back, we use it as support to the upside. Came down, closed below, use it as resistance to the downside. And we came again, even though we closed above, we pretty much reject immediately. So obviously, we're going back down to the downside. Same thing over here, you get a next rejection, same thing that the market did to your left, it's going to do again to your right until we broke above. Then it's going to do the same thing that it did when it was going up. And that's how you pretty much get the market. So let's say the market reject once again. No, you're interested. You know that the market is rejecting this major because this is a 4 hour. Let's say this wasn't here. This didn't create it yet. You're in the current price action right here. You know that previously the market reject right here. So you going down to smaller time frames, you're gonna start looking for, let's find about that area right over here. Going down to the smaller time frame now, whenever we are going up, we are creating this. Whenever we are going down, we are creating this. So this is how you'll find time frame correlations, meaning if your 4 hour is going up and your 1 hour is going up, you shouldn't be in the market looking to sell because everything is showing you that. Did they give you 30 minutes? Yeah. Everything in the market is showing you that the market is going to the upside. So you should be looking for sells. You should be looking for buys. Whenever a market hits your rejection areas and started coming down, you want to start looking for sell. So let's say we hit this rejection area right here, right? No, what you want to look for is the market to shift structure. We're in that rejection area. We previously came here and rejected. You want to jog this to the left. To the right. Now, you have this area right here where you're potentially going to look for entries. You're looking for entries below this area because you realize we use it as resistance, came down, use this area support, broke above, and we keep bouncing off of this area. So obviously, right within here is a smaller time frame support level. So until we broke below the support level, it is you don't look for any trades within here. And then you would have your zones above here also. You'd look for buys above if we broke above right here. Because every time we came, we rejected, came, rejected, came, rejected. So you don't want to take buys right anywhere in here because you don't know if the market is going to reject and go to the downside or it's going to break through and go to the upside. Same thing with sells until you actually have, some form of candle closure. All right. Let's say you have, if you want to take a breakout trade, you would potentially take a breakout trade whenever the market break below the last body. So I like to give mine a few right here. And then you take your trade right there. Previous highs. And then, potentially you want to aim for the next zone, which would be down here. Right on these right here. That would be your next zone. All right, let's say you have $1,000 in an account and you took this trade and you're risking $200 or you're risking $100. Let's say you're risking $100 on this trade. On this trade, I mean, it took, these are 5 minute candles. So let me see exactly how long this took. This took pretty much from 6 in the night to around 8 in the morning. So let's say you take it 6 o'clock tonight, then it would have played out 8 tomorrow morning. But yeah, let's say you took this trade risking $100, meaning when you say risking $100, meaning if the market had gone to the upside and stopped you out at your stop loss, you would have lost $100. But the market came and hit your take profit, you would have made $227 on that trade, risking only $100. And I mean, you pretty much do the same thing over and over on whatever peer you want to trade. This that I turned on is ICT's kill zone. This is just a session. So this is New York session. I only trade New York session. So I'll trade from 8:30 to anywhere between 8:30 from 8:30 to about 9:10, sometime 11 o'clock, depending on how fast the market is moving. If the market is moving good, you know, I'll be out of a trade probably within 5-10 minutes. Sometimes you have like one candle like this. I would probably have my buy zone right above here. And then this one candle would have like just give me what I was looking for and I'm really out. But yeah, if you realize right here also we broke below, came all the way back up, didn't close back above this zone, rejected it immediately. If you had got into a sell at this level all the way down, which I normally get out at previous levels. Well, yeah, this is pretty much the market move, and I can show you my chart. This is my chart. I have a lot of lines on my charts. This was a trade that I took Friday. Yeah, this was a trade that I took Friday. Well, I took the sales right here first. The market rejected and stopped me out. I think I lost $1,500. Then I realized we refused to break above the all-time high that we created right here. We had the candle come up, closed all the way back down here. So I ended up taking the sales up here, making back like 3,000 something. But I made back what I took initially, but my initial entry would have been right here. I took my initial entry right here. I just didn't want to wait for it to come all the way back down again. So I took it early because we're at the all-time high. We've never been this high before on this market. But yeah, this is, take profit would have been the previous zone, like I said, and my take profit was right here, right on these highs, and that's exactly where I got out. And the market continued all the way down. And next week, if it break above here, I'm gonna take the buys back up to underneath here. If we break below this zone right here, uh, and I'm gonna take the sells to my next zone, which would be right on top of these highs. And you do that on a consistent basis, trust me, it's gonna pay off in the long run. Because let's say you catch 4 trades, risking $100, making 200, 250, sometimes, $300. If you add that up over the course of a week, you could potentially make $1,000. You add that up over the potential of 4 weeks, you could make $4,000. Not a lot of person is making, I know on the lower end, majority of persons inside the United States, I don't know where everybody is, but if you're inside the United States, majority of persons not making $5,000 a month inside the United States. So if you're doing that by just, being in front of a computer for a few minutes each day, that could be a plus if you have a job. you're making $5,000 on the side, different from you working. But yeah, this is a skill set that could take you a far place. It could take you far. But yeah, guys, pretty sure this is about to end. So I trade live pretty much every morning. So if anybody wanna watch, I send the link in the Discord every morning. So if you wanna watch me trade, because that's how I actually became profitable watching AB trades trade every morning because I was in this group, and that's when I actually started seeing profits within the market. So if you wanna watch for the time being until you actually learn, because I would say don't start risking the money until you know what you're doing first. So you learn the skill set. And then for the rest of your life, you can always go on the charts and make some money if you want. You know what I mean? You have the skill set to do it. But yeah, you can, I mean, this is the broker that I use. They have before this end, let me show you real quick. They have, where's accounts right here. You can go and use demo. So see, I was testing the market out first with $1,000 account, and I wanted to see what the spreads were like on this broker. So I ended up testing it out with a demo. As you can see, demo account right here. So I ended up depositing $932. I haven't started trading on this account yet. I'm gonna start Monday, which I'm gonna do a challenge. But I might start the challenge for the new year, January. I'm gonna do 1,000 to 50,000. See if I can do it within like 6 or 5 months. So starting January, I'm gonna do a challenge where I'm gonna bring this, which I'm gonna trade on this account next week, and whatever I make, I'm gonna just withdraw for the Christmas. But I'm gonna start from $1,000 January the 5th, and yeah, I'm gonna try bringing it to 50,000 within between now and August. So if you guys wanna, join the process, I'm gonna be trading live every morning also. Say if you want to trade with me every morning, if you have, I wouldn't say use your last $1,000 if you have a last $1,000. If you have an extra 500, an extra 400, you can deposit and trade with me live every single morning. We can talk about risk management in the next one that I do. We can talk about risk management moving forward. So you can take time and scale the account so you can compound. But yeah, we that pretty much